Hello, and welcome to Bridgeford Trust Company's Delivering Direction and Control podcast series. Our podcast series is designed to educate, challenge, and inspire listeners while keeping you updated on developments regarding modern trust law and powerful planning opportunities available, all in an effort to deliver direction and control to clients and their advisors.
Hello, everybody. This is David Warren, co-founder of Bridgeford Trust Company, chair of our board, and continuing to be very excited about our podcast series and the success of it. I think now with over 55 episodes, we are shocked and humbled by the sheer talent and thought leadership that we've been able to attract. And the amazing conversations we've had over the last now 2 or 3 years with people from really all over the world, talking about big ideas and issues that are impacting our industry collectively, and being able to talk to partners and collaborators and just be of use really to our community. Lately when we go to conferences and different events, it's great because people do come up and ask me questions about a podcast they've seen. So we're excited about it. Excited about today's podcast. A relatively new friend of ours, Ed Barone, is with us. Ed is somebody like me, somewhat of a kindred spirit. In many ways, grew up in the trust space and ultimately migrated into a great position in a great industry that he will describe in a couple minutes. But Ed is a great thought leader in and of himself. I enjoy our conversations because he's extremely thoughtful and always very well aware of what's happening around him from a geopolitical perspective, because he needs to be, because of the type of business that he's in. He leads the exit planning team. It's called E-Exits, and eexits.com is the information, of course, that will be available connected to this podcast recording. But he's a seasoned business advisor. He has credentials that are very impressive: the CBEC, Certified Business Exit Consultant, and Certified Merger and Acquisition Advisor. So he brings those two credentials and training modules together and has extensive experience helping families and particularly business owners position for exit. And I don't mean exit from the earth, I mean exit from their business. And what's amazing is that what Ed does is so unique in the way he talks about it and the way he approaches his clients is pretty inspirational given the work that we do at Bridgeford, because we are constantly meeting families and first generation business owners who have not planned for their exit from their business appropriately. And so all the things like asset protection and tax planning and privacy and the modern trust law tools that we've been really passionate about over the last many years really coalesce nicely with the work that Ed has done all of these years. And so with that, Ed, I welcome you and thank you for taking the time to talk to us today.
No, Dave, thanks. And thanks for the opportunity to be on with you and your listeners. Always enjoy talking about what's going on in the exit planning industry, the wealth, and the markets of what's going on right now and the turmoil that we're seeing. It's always interesting to have conversations around it, and look forward to our conversation today. Enjoy working with Bridgeford. Really like your model for our clients, and have the independence of a trust company, independent from the investment advisor and independent from the bank, I think is the best solution for clients going forward. The old trust model of the bank controlled everything, I think creates problems for clients because they're not the best bank, they're not the best trust company, or they're not the best investment advisor. So being able to terminate one of those, I think is very valuable for a client.
Oh, absolutely. I love that. I couldn't agree more. And that's a great place to start, Ed. I mean, why don't you give us a background, a snapshot into your background and how you ultimately got to Evergreen Wealth Solutions, which I neglected to mention, and exit,
I'm sorry,
EG
it's
Exits,
EG Exits. Yeah.
egexits.com, is really a part of Evergreen Wealth Solutions. So, but before we get into the details of that, which is impressive in and of itself, talk about how you got there.
Well, going back 25 years ago, I was a food and beverage director for Marriott Corporation, executive chef training, and all those things. Had kids, wanted to see them. So I spent some time, ran some large conference centers for organizations, and spent some time figuring out what do I want to be so I can see my kids, right? and be involved in their lives and not be at 6 a.m. till 10 p.m. at night type of worker. So I transitioned into wealth. Everyone's always marveled, how'd you make that transition? I think, which, I spent the last 25 years in wealth, started out in the independent model, was solicited away by M&T Bank, Wilmington Trust Division. Went and worked for Wilmington Trust for about 8 years. Really liked the model, liked Wilmington Trust. But I got frustrated with the inner workings of a bank and trust company, which I mentioned earlier. You can't be best in all worlds when you have that model. So I think, which led me then to Evergreen Wealth Solutions. And coincidentally, the founder of Evergreen Wealth Solutions, Andy and Harris, and I cut our teeth in the business about the same time in the early 2000s. He stayed with independent, and then he broke out and created his own firm in 2015.
Which I remember very well. That's right when I met Andy, and we spent some time together in Williamsport. He's an impressive person as well.
Yeah. So, I ran into him grabbing a cup of coffee. We sat down, we talked, and the rest is pretty much history. I joined the firm, and then we became an RIA uh, right after I joined the firm, which for your listeners who may be aware, may not be aware, but we act as a fiduciary for clients. We're transparent in everything we do, and the client's interests have to be put first. So love that model. Makes life much easier than the old brokerage model. From a transparency for clients, from a fiduciary, decision making for clients, it's just really clean and easy. So I really like the model. At Wilmington Trust, I started to cut my teeth in the exit planning business. And started to do it for their commercial clients. So they would bring Wilmington Trust in. So I was doing exit planning really without calling it exit planning. I joined Evergreen and became involved with the International Exit Planning Association out of Boston, where I got my certification. And now I sit on their leadership council for the last 2 years, helping guide the organization and develop the education content for the exit consultants and continuing ed. So it's been a great experience. Love the organization.
Well, and congratulations, because I understand you were named the Exit Planner of the Year in 2023. So that means you exited a lot of people, but again, not from the planet, but from their business, right? So talk. Where would you define exit planning, just big picture, high level? Because I know when we first met and I started to understand what you were doing, it could have multiple definitions like family office and wealth management. So put a real fine point on it for us. Exactly are you saying when you focus on exit planning for folks?
So, when we talk about exit planning, I think a lot of business owners in their mindset say, I'm not ready to exit. I don't need you. And I revert back to a long time ago, the famous cliche of Stephen Covey, begin with the end in mind, right? So just because you have an exit plan doesn't mean you have to exit. But, I want to share some statistics with you that I think are really eye-opening in the industry and how exit planning. We'll go through this through our podcast, but you always say why engage with exit planning, and I just want to read 3 or 4 statistics that I think are really eye-opening. 50% of business transitions are involuntary. That was a survey done by the Exit Planning Institute in 2023, right? So you look at that and say, wow, involuntary. People just, had no control over the exit.
So you mean they
Was
were
it death?
forced out? So you mean
Yeah,
forced
was it
out,
death?
death?
Was it
Yeah,
disability? Was it the partnership fell apart?
interesting,
All right, all,
interesting.
all those things.
Well,
And
that's a
when I
high
got,
number. That's an alarming
so
number. Wow. Yeah.
it is an alarming number, right? And I meet with business owners, and I presented about a year ago to a group of 10 business owners all in the same industry. And 9 out of 10 of them didn't even have the basic succession plan done, right? So don't, I go back to when I got in the industry, succession planning. We went in, do you have a buy-sell agreement? What happens at death, disability, divorce? But this statistics right here, 5% of business transitions are involuntary. Just having some form of business succession written out, buy sell agreements if you have partners, what happens if you die, how's the business handled? It's really alarming that 9 out of 10 in that room did not have a succession plan, right? The next statistics is 70 to 80% of business transitions are unsuccessful the first time. And you read that statistic and you go, wow, that's a big statistic too.
So what do you mean unsuccessful? You mean the passing of the
The-
baton didn't happen, or the business
yeah, it
collapsed
just
during
didn't
doing
happen,
everything?
right? The deal
Okay,
collapsed for some reason.
okay,
And
okay.
when you understand it, I think business owners who haven't been through the sale or purchase of a business, it is one that just once you get the there's two teams. There's a planning team and there's a transaction team. But once a transaction team gets involved, that alone is 9 to 12 months of time that you're putting forth to take your business to market. And it is a lot of work. You know, the hours to put together the due diligence and the data room of your business and all the information that's needed by the potential buyer to review your numbers and everything. So to have that failure rate and go through that, number one, is a big problem. But number two, I know through our exit planning process, we help solve a lot of those issues before you even go to market, right? So that's why you engage in exit plan. Uh, the other reason is 70% of a business owner's wealth is the business. So why don't you have a long-term strategy to exit your business also baffles me, right? I know you have a 1-year business plan, they have 2-year business, 3-year business owner, right? You have all those plans, but when that much of your wealth is tied up, you don't have a basic succession plan, you don't have a strategy to exit your business. You should really be working on that because once you figure out your strategy to exit, and there's 5 exit strategies we can talk about, you're going to manage that exit strategy. You're going to make decisions based on that exit strategy, whether it's an ESOP, private equity, synergy buyer, family transfer, management buyout. You're going to start making those decisions, how you manage your business towards that strategy.
Sure. Well, thank you for going through that. It provides a lot of clarity and sort of brings me, I think, to a point that I know we both are not only passionate about, but very vigilant in following, which is happening around us, right? I mean, I think everything you just said, particularly the 5 ways to exit, have to be influenced unequivocally by what's happening in the markets and geopolitics and we can't have that conversation without acknowledging really what's been happening in the last 3 or 4 months in our country. I referred to it a couple of weeks ago in New York City as the proverbial elephant in the room, or the proverbial elephant in Washington, a Republican president. And it's not a political statement, it just happens to be Republican. But I mean, there's no question that what we're seeing historically, we've really never seen, at least in my lifetime, not just with regard to the challenges of the Constitution, but these tariffs and the market volatility. And so I have to believe what you're seeing all around you is impacting what you're telling your clients relative to exit strategies. And I would love your thoughts about all of it, in particular the tariffs that seem to be on again, off again. So please, I would love your thoughts.
Well, over the last couple of years, interest rates impacted everything, right? The market reacted to the Fed. The Fed was controlling the market, right? Every word the Fed said about whether he was going to raise or lower interest rate impacted the market. It also impacted the M&A business, right? So as the Fed started to raise interest rates drastically quick, it slowed the M&A activity because of the cost of capital, right? Now I think as we entered this year, statistically, I'm involved with the Alliance of Mergers and Acquisition Advisors, where I got my SEMA, and involved involved at different levels with them. But the statistics this year, the M&A market was very optimistic, right? Private equity were rolling up their sleeves and sitting on a ton of money saying, all right, interest rates are what they are. We think they've hit a ceiling. Hopefully the Fed would lower them before all the tariff stuff, right? And uh, so we actually saw multiples start to tick up. Multiples on EBITDA start to tick up for business owners. So there was a lot of enthusiasm, optimism started occurring. But with this tariff policy, it's kind of putting the brakes on again. When you look at the tariffs, and if you're a buyer of a company and you see these tariffs, you're probably going to slow down and say, all right, what products is this company using? Where are they coming from? Again, we got kind of go back to COVID. When COVID disrupted supply chains, tariffs is going to affect profitability and potentially, disrupt supply chains again.
Which is so mind blowing to me. And you and I were talking the other day. I mean, I probably somewhat naively and not well informed enough, to understand that this tariff problem I didn't realize was as gargantuan as President Trump seems to think it is or was. And so I was kind of the belief we have lots of other problems on the planet Earth, and tariffs didn't hit the top 10, but that's what we've been consumed with hearing about. And so, we're certainly not wading into the political debate on this thing. The uncertainty that has occurred across not just the M&A market, but I would argue all markets, including my market in the trust space, is truly extraordinary. And again, I've used the word historical before, but it is impossible to even predict. And we have some of our largest clients saying to us, "What the hell's going on? And should I move my money offshore?" And what once was 2 weeks ago or 90 days ago, the United States being a tax haven, a privacy haven, and an asset protection haven, now suddenly is thrown upside down because of essentially one man and this obsession with tariffs. And so I guess the question is not only, or not the question, the observation is not only is it impacting M&A and exit planning, but I think it's impacting and upsetting the entire financial planning industry at the moment, just watching the market volatility. So please comment on that for a moment.
Yeah, so it's really interesting. I've been in the business a long time, and I thought my phone would ring off the hook a lot in the last couple of weeks, and it really hasn't. But I have been reaching out to my clients, and you get to know your clients, and you get to know which clients that headlines create anxiety for, right? And so I've been reaching out to several of them. Uh, some that I knew they had money on the sidelines, waiting and waiting. And when you look at it, you don't invest in government. You don't invest in specific government policy. You're investing in companies, and you're investing in companies, and you look for companies with sound balance sheets, quality free cash flow, and that's what you're investing. Is their stock price down? Has it hurt your assets net worth today? Yes, but it also presents an opportunity because good companies have been adapting to regulatory and policy changes for decades. And that's what they'll do, right? Same with a business owner. Business owners now, you look at the age of our business owner, 80% of businesses will transition in the next decade. So you look at this, and it's the baby boomers who had businesses in now 20, 30 years, and how many ups
Mhm.
and downs have they been through?
Sure. That's what the definition of being an entrepreneurial, right? Entrepreneurial person is to adapt and reset. And I love the way you said that, because I think it's something I hadn't thought about. I mean, certainly it was and continues to be a bit alarming, as massive aspects of the federal government are being dismantled, and what once were, you think, institutionalized aspects of how we deliver services in our country has been radically changed in the last 90 to, well, I guess 3 or 4 months. But I think you're right on. I mean, so while that may be unsettling and creates a certain degree of uncertainty, um, though the investor isn't investing in the federal government, they're investing in entrepreneurship and the power of the entrepreneurial spirit and I guess capitalism in the United States. So I think that's a really important distinction for our listeners, because you got to distinguish between what's alarming you. I mean, are you upset because is somebody upset because the Department of Education is going away? Maybe yes, maybe no. But is that really going to impact your investment decision in Google, right, or whatever it is you're advising your clients? So speak to that.
Well, yeah, you look, you can say, oh, should we be investing globally? And here's what I'm going to say: diversification matters, right? And you have to stay diversified. And you know, while you were speaking, I was talking about your clients are saying, should we move our money offshore? What should we do, right? Uh, from an investment perspective, and if you're buying IBM, IBM is a global company. Most of the large U.S. big cap companies are global anyhow. So again, diversification matters, right? They're going to close down a shop in their manufacturing in China. They'll move to Vietnam, right? They're all going to make changes. Those changes may take a while, but you just got to stay the course, stay with your plan. And when it comes to trust planning, generational planning, when you look at the federal exemption for a married couple, what is around 26 million today, give or take, depending on the adjustments each year.
Well, and
But
also depending on whether or not we still have an IRS, that's something else that people aren't even sure about. But for another
yeah, who
podcast and
knows?
another discussion,
I know my business owners wish we didn't.
for sure. None of us like the
I kind
IRS.
of wish we didn't too. But
Suppose.
anyhow,
Yeah, we'll get to that in the next episode. Go ahead.
another episode. I'm not a tax person, so. But anyhow, I lost my. You made me
Crazy
laugh,
world
and
we're in. No,
it
it's a
is a
crazy
crazy
world. How
world,
do you, it's
right?
easy to lose a train of thought, and every time I look at the news, I sometimes forget my own name. But go ahead. Yeah, please continue.
Yeah, but when it comes to the generational planning, and you're looking at that 26 million, right? How many people are actually in that, right? So trust planning to me has always been, there's two sides of it. There's a tax planning side, right? But a core of why people do trust is the non-tax reasons, right? What are the non-tax reasons? Which kids can handle money, which kids can't handle money. And it always amazes me how many attorneys, when they look at documents, are saying, well, what age do you want your kid to get the money? 35, 40, 45, right? That's when we see these pockets of money being distributed. And I tell my clients, why would you ever want your money to leave a trust for your kid? A trust is not to protect the money from the kid, it's to protect the money for the kid.
Yeah, or and help protect the kid from themselves too. I mean, we've been talking a lot about that at Bridgeford. That's a big theme at Bridgeford. I mean, kind of modeled after the show Succession on Netflix or HBO, wherever it is. What you're talking about strikes to the heart of what we talk about all the time at Bridgeford. It isn't just a tax play; it's an asset protection play. It's a privacy play. But recently, we've been talking about it. It's also a play to protect next generation from themselves. And that, I think what you do in the exit planning is essential as part of that planning process. But I couldn't agree with you more. I couldn't agree with you more.
Yeah. And all our business owners, the reason to plan, another reason to engage early for exit planning, we're looking at the big picture. So we're looking at the business value and how that's going to be merged into the personal wealth. Then how does that transition to legacy wealth? Well, one of the most important things from a tax efficiency, and you know this probably much better than I do, uh, but there's opportunity before you go to market with your business to do some strategies on your estate planning to eliminate, possibly, to move more out of your estate at a 30-40% discount prior to going to market in the trust, and realize that value after the sale in the
Well,
trust,
even
right?
and even strategies like incomplete non-grantor trust, which is alive and well and works exceedingly well for people in Pennsylvania, where they work with somebody like you, giving them the expertise and the plan to exit. But before documents are signed, if that business is dropped into an incomplete non-grantor trust, then there's an enormous amount of state capital gains that can be avoided legally, and IRS has blessed this. So I mean, to your point, not only is this an interesting cocktail conversation, but you can measure some tremendous benefit here. Although we said a moment ago, the trust isn't just for tax benefit. However, when somebody's selling a business, nobody likes to pay millions of dollars in taxes to the state, right? And it's even
Twice.
more twice, and it's even more compelling in New Jersey and California and all the states that we operate in. So no, for sure. I mean, I think that's why I was so inspired by our initial conversation, because you're doing essential work. We believe we're doing vital work and virtuous work, and in collaboration, we can save a lot of money for families on taxes, but also incorporating the trust conversation. Protect families from themselves. I mean, again, if you look at the show Succession, I mean, the punchline of that show is that next generation was effectively destroyed, and one reason it can be argued is because there was no exit strategy for Logan Roy, right? And he ended up dying suddenly, and then it created even more chaos for the next generation. So let's get into more. You said something quickly, and I kind of want to drill back down into it. You said there were 5 strategies that generally you approach. So can you list them again? And I want to understand, like in this particular market, which one would you lean on? So we list them again. Which 5? Go through the 5 again.
So there's the family transfer, right? And there's pros and cons with that, right? And I go through those pros and cons with business
Well, if you
owners
don't like your
of each
family like
exit.
me, yeah, like I
Yeah.
don't like my family, so I'm not
No.
giving them my company. I'm joking.
No, I know, right?
I like
So
I like
there's
one of them so far, so we'll be all right. And then
yourself's
she's
not included, Dave.
yeah, I'm not included. No, no, I often don't like myself, but please continue.
And then there's the management buyout, which has its own risk and pros and cons. And then there's the ESOP, right? And those three basically are internal transfers. So if you break this 5 down, you have internal transfers, and then the 2 external transfers would be private equity or a synergy buyer who is either your competition or a buyer who wants to bring on your products or servicing in addition to what they do, right? So, you start to look at that and you break those down and you said, what extra strategy is good for this time period?
Yeah. Well, that was
So
good.
I'm
That's
going
going to be
to,
my point. Yeah. So let's talk about that. Like this, if I were to come to you today and say, listen, I need an exit strategy for Bridgeford, I would imagine you're going to look out over the market and advise me on which of the 5 might be the most compelling option for me at the moment. Right. So
well,
give me a
we're going to
theoretical.
start with you first and we're going to, we sit down and we say, what's your goals for you, Dave? What's your goals for your business legacy? And what's your goals for your employees? Because the studies that I've seen and read over the last 15 years, those are the top 3 priorities for a business owner. And those 3 priorities really help decide the exit strategy, right? So you meet with business owners and they can all weigh equally or one can weigh more than the other. Uh, so there is no right exit strategy for the time. It's what exit strategy accomplishes the goals for the owner, for the employees, right? For the business and legacy. There are business owners I meet with, they don't want to sell their private equity because they don't want to be that guy in the community that sold their business to a private equity that changed the culture of the business, uprooted it, and sold the business again in 5 years.
And I'll
So
raise
they
my
go the
hand.
way of an
I'll raise
ESOP.
my hand as being one of those people. But go ahead. Yeah.
Yeah, right. Or do they have a leadership team? And is their leadership team or 1 or 2 on there capable of taking the business and buying the business? And that has its own financial risk, right? So, and the other part of that is, so we look at goals, then we look at financial readiness for the family, which is always a priority. What do you need to net from the business? It's about what you net, not what's a gross value. And that's why exit planning also helps. We look at strategies and we start to talk about the impact of your exit and what type of exit and the tax implications, whether you're an S Corp, C Corp, right, LLC. Can we be doing things 5 years out with your CPA to get cap gains instead of income tax, right? Because they're the 2 choices when you exit. There's going to be a mix of those 2 depending on how it's structured. So again, it's about net returns, not gross value uh, for that exit. And then we look at the mental readiness of the business owner,
Yeah.
right? So when you look
Which
at the
which
business
probably, not to
owner,
interrupt you, that could probably be the hardest conversation for business owners is the mental readiness, right? Because the first generation business creator probably is never really ready, right? Even if there's a lot of money on the table. I mean, who wants to give up control of your baby, essentially? I mean, and I'm speaking from my own perspective. I consider myself young at 52, but I can't imagine thinking about an exit at the moment. But at some point, I'm going to have to think about it, right, Ed? So, Ed, please speak more about that.
yeah, so the mental readiness, right? I forget which Ivy League school did the study, but they broke it down. I think it's true to what I see. 70% of business owners are passionate about what they do. They love their trade, their skill, their expertise, and the business is created. That's about 70%. And I'm going to say that 70% has the hardest time stepping away because they just love what they do. So, what are you going to do the next day? And I have those conversations. And this is another reason to be 5, 10 years out. Because what are you going to do the next day when you're no longer part of the business? Right. And what extra strategy is going to help you exit? Maybe you need to exit slowly. Maybe there needs to be a 5-year transition out of the business instead of an abrupt end. And no business owner is, as rarely is there ever an abrupt exit where you sell today, you don't show up tomorrow. Most transactions and deal structures, you're maybe rolling equity. It's rare you get 100% cash at the deal. And they want your knowledge. They want you to stay engaged to transition your knowledge or your client base and make it a smooth transition for the new owner. So,
Yeah. Yeah, even from a mental health perspective, not to interrupt you, but I mean, I don't know how I could. I'm speaking for myself. Just receive a big check on Tuesday, and then on Wednesday I'm done forever. I mean, how do you flip that switch in your head when you've built and loved something all these years? I mean, it takes. I just don't know that. I can't imagine really many business owners have that mental capacity, and you hear about when people do that, the mental atrophy kicks in because a year later their brain power is less and they don't know what to do with themselves. That's a serious
well,
issue.
and one of the statistics I didn't share yet was 75% of business owners regret selling their business a year later.
75%. Oh, wow.
Regret. Now, there's lots of reasons to that.
Yeah, sure.
And again, mental readiness and what does your exit look like? A
Hmm.
synergy buyer, you may be able to exit a lot quicker.
Hmm.
If you're going to a private equity, are you ready to take orders from someone else on how to run the company that you
Well, I
ran
know
for
I'm
30 years?
not. And I can tell you, Bridger's approached a lot by private equity. That's why that hits very close to home for me. And for a whole myriad of reasons, we're not interested. But that is top five. Is how do you live and die by your decisions, and when you get comfortable taking all that responsibility, uh, then you live with it. And then when somebody walks in the next day and tells me how much money we could spend on marketing and what time I need to be in the office, I don't know that I'm going to respond well to that. And that's where I think every business owner would have that struggle, right?
Yeah. But you can look at private equity though on the flip side. And if finances are driving your decision and some of the other emotions aren't, I've had clients who, if you find the right private equity partner, and that's where you need a good investment banker who understands what private equity partners are really going to be good partners for you, number one. But you can make a lot more money with a private equity exit if it's the right firm. So if finances is driving your decision, it can be a very good decision. But again, I've seen business owners that the employees are just as important as anything else, as well as the business legacy in the community, and keeping that here and keeping that a thriving business community that's not going to be moved in 5 years. Uh, so there's lots of reasons to go through these extra strategies and figure out what fits the goals of the business owner.
Yeah. Talk to me about, please, ESOPs. When I was practicing law, they were pretty red hot, and I actually did some work on completing some of those and got involved with some of the planning. And it seemed like they kind of ebb and flow, where it's the hot solution, and then it's you don't hear much about them. I have one very large client who did an ESOP and then it regretted it for a couple of different reasons. So what's your first of all? Could you define it for our listeners, or maybe not everybody
So,
even knows what
you
that
know,
is, and then
an
talk about.
ESOP is sure. An ESOP is an essential sale, but you're creating the buyer. A trust is created, and the trust is buying your shares. So now you have two attorneys involved, one that represents the trust, your attorney, right? That gets this deal done between the trust and you to make sure it's clean, transparent, good for the buyer, who are the potential employees who are going to become shareholders, in a sense, and understanding that. And it's you should to be a company that's producing about $1 million of free cash flow a year, right? Because it's and 20 plus employees. It depends on what GSOP expert you talk to, but a lot of them say, you can have $1 million of free cash flow, EBITDA, and 20 plus employees. This can be a successful exit. It can be a great exit if you want a slow exit, because I've seen business owners take it and they sell 20%, and it's a good way to take money off the table to transfer wealth from business to personal. If you're a C corp, it can be very tax effective from deferring the capital gains, right? And and if the strategy works out well and you pass away and you use this strategy, your kids then get stepped up basis, and no cap gains is ever paid on the sale. right? So again, though, it comes down to, and then every year, though, it's not like you sell it once and you're done, but every year there's about a $50,000 average cost to maintain your ESOP. And that is because the valuation needs to be updated, new shares need to be issued to everybody, all the administrative that needs to occur each year with it. So, you know, really understand an ESOP, really understand every exit, right? So when I sit down with a business owner, we go through the pros and cons of each exit. And usually I can quickly identify through the goals which one's going to work and what's not, through conversation, through their emotions and what's driving them. And I can show them the pros and cons and go down those roads and bring in the different advisors to have those conversations.
Yeah, let's talk about the advisors that you bring in. It's interesting because I mean, stepping away from the ESOP conversation. I mean, this planning, it has to involve a multidiscipline approach. Not just trust planning, but all kinds of planning. So, you can talk to me about who you assembled to the table and put on the team to get this done for your clients.
Yeah. So, an experienced exit planner is going to have a big Rolodex of advisors who they know will collaborate and work as a team, because it really takes collaboration. And when you think about the life cycle of a business owner, how many advisors have come and gone in their life through the life cycle of a business, right? But when you get to the exit, I break it down into two types of advisors: the planning advisors, right? And it's the estate attorney, it's the corporate attorney, it's the CPA, it's the exit planner, who you may have some of those people in play already, you may not. Uh, it could be the an insurance advisor, your wealth advisor. At Evergreen, we do the insurance, wealth, and financial planning. So, our team consists of a CFP. We have an investment team that handles the investments. A bunch of guys who have 20 plus years experience at the institutional level now run our portfolios for clients.
And do a
So
great job. I know firsthand. Yep.
yeah, but so all that stuff comes into play just there. And then you have the transaction team. And they're going to need to be introduced at some point, but the planning team is critical, right? You may need a growth advisor, you may need an EOS implementer, right? And you may need, and a good exit planner is going to help discover where there's opportunity to improve value and make your business more transferable. And that's the key. Is your business transferable today? And good advisors are going to help you. And I'll come back to that. But then you got the transaction advisors, which is the M&A attorney and the investment banker or business broker, right? And they need to work together. There will be conflict there, because the investment banker wants to get this over the finish line because the way he's driven on compensation. The M&A attorney is going to make sure every word in every document is protecting you and that you understand the consequences. So there can be some conflict there, as long as it's healthy conflict.
Yeah, and if I could jump into what I have found in practicing law and now in Bridgeford is, if all these folks don't talk together, I mean, it's fine if there's disagreement, but if there's no open communication, it's disastrous. And my point is just what I had mentioned earlier. If somebody on that team doesn't know of an incomplete non-grantor trust strategy, then the business owner could effectively lose millions of dollars because of that idea wasn't brought to the table by somebody
Yes.
on that team. And so everybody's got to be in constant communication. And that's just one of many strategies. I just toss that out
Yes.
because it can be the most compelling. But
Absolutely.
I've witnessed this whole process happen, and then somebody calls me and says, "Hey, I signed up. My company's being sold, David and Bridgeford and trust attorney. What can you do for me?" And I'm like, "Well, you just called me. You're too late now. There's not
Yeah,
much we
you
can
just
really do."
lost 40% or whatever.
Yeah, so I look to their team and I say, "What the hell happened, guys? Okay, I
Yeah.
know there's a lot of moving parts, but I mean, I almost wonder if that's some semblance of malpractice, if that isn't part of the discussion." I mean, I know this is all heady stuff and highly technical
I don't
and
know,
highly
but
detailed, but it's all part of the. And I'm honestly, Ed, I've seen so many times where this point has been missed in the
mhm.
process.
Oh
I'm sure
yeah.
you have too. You have too.
Oh,
Yeah.
absolutely. One of my very first engagements when I was with Wilmington Trust, it was a lower middle market business, and the client was a month away from going into due diligence. We got engaged. We ran his financial readiness. We ran in what he needed to extract. We ran in his planning, and we're like, "You're not ready." And he pulled the plug. He stepped back. 2 years later, went back to market. He got more money for it. We accomplished all the goals that he needed. We got the right planning in place with trust and all those things. So it was a much more effective, efficient, and I think many business owners who haven't sold a business think it's like selling real estate.
Yeah, I
It's
agree.
not.
Yeah,
There's so
couple
many
more,
complexities to
couple more
selling a
things going
business,
on there than just selling a piece of real estate.
right? A lot more
No,
complexity to it.
no, it's a
And
great.
I really don't think business owners truly understand. And it's fun. I've been doing exit planning now 10 plus years, but it's finally gaining hold as an industry. I just came back from the EOS National Conference, and exit planning was in two breakout sessions. It's starting to be embraced nationally by other advisors, and business consultants are starting to see the value of it.
Well,
You know,
and that's great. I mean, as it should be. I mean, it isn't just about money, right? So if I could just jump in because you sparked something in my mind. I mean, so the average person may say, "Oh, it's so romantic and the American spirit for somebody to start a business and then sell it in their 60s or 70s for $1 billion. Go America, go capitalism," and that's fine. That's fine. But what you've just gone through in the last 20 or 30 minutes is there's a mental health component, there's a training, preparing the next generation component, there is all of the, dare I say, touchy feely aspects of the conversation that you're having that makes what you're doing not just about making money for the business owner, but really a whole panoply of issues that are designed to help he or she as first generation wealth creator and the family forever. And I think that's the part that people are missing. This isn't about making a business owner rich. This is about being of use 360 degrees, I think. And I love the
mhm.
way you talk about it. I love the way you talk about it.
No, you really need a holistic team approach. It's funny you brought up collaboration earlier at the IEPA. We're actually going to roll out later this year collaboration training. How do we get the other advisors, and how do we work with other advisors and make this seamless for the client? Right? We don't need any egos in the room when we go in to work with a client.
Well,
Right?
don't call me in. No, I'm joking.
No,
Just
no, we
kidding.
love
No,
working with you
no,
guys.
I'm just kidding. No, it's great. I mean, you make a very good point too, and it's probably a great way for us to sort of tie this all together. I mean, essential in all of this is to operate absence of ego with all these highly trained, highly intelligent, highly educated
Oh yeah,
professionals in the room. You can't have somebody in there who says, well, look, this is the way I think this should be done, and if you don't do it my way, you disrupt the whole team approach. I mean, we see it in our industry too, and I love that the industry, I believe, is going into a conflict-free, collaborative, uh, hopefully devoid of ego, where again, a kind of a punchline at a cocktail party, but the best interest in the client is and I laugh because it's like when you say that, we're like, well, of course it is. And I would say, well, industry hasn't always operated that way, so it's so essential in what you're doing to make sure ego's not pushing the agenda and the best interests of these business owners are at the forefront, because you and I have lived in an industry for a long time where that hasn't always been the case, right, Ed?
yeah. I mean, yeah, and that's why I like our model. We're fee based. We're not commission based. Right? I mean, it just takes away those conflicts of interest. So working with the right advisors, with the right compensation model, and all those things that collaborate that gets you over the finish line, right? Dave, one thing I'd like to say is one thing I'd like to leave with your business owners is they are the owner of a pro sports team, right? Let's use football as an example. They're going to hire a general manager, they're going to hire a head coach, they're going to have a defensive coordinator, offensive coordinator, and the owner is the ultimate decision maker, right? But it's so important to have cohesiveness and collaboration in your team to get that win for you, right? And everybody moving the ball forward constantly down the field. And listen, when you're going through an exit, you're gonna suffer some yards lost, and you're gonna take a step back, right?
Yeah,
That
a sack
happens
here and
every
there,
time
right?
the market goes back for our clients. They
Right.
panic, oh, we're stepping backwards, right? And
Yeah,
we go
right.
back to, but this is our plan.
Yeah.
And our plan for these setbacks. And we're ready for these setbacks, and we just keep moving the ball down the field.
I think that's perfectly said, and an excellent way to bring us to the end. And as I said a few times, I think like what we do at Bridgeford, your work is virtuous and essential, and is so much more and so much bigger than just making your clients a big payday selling their business, because there's so much more that just goes into it. And so for our listeners, I will correctly say that what Ed's focused on is his part of Evergreen Wealth Solutions that he's responsible for is egexits.com. The information, as I said, will be attached to this. Please think about the concepts we talked about today. Think about your clients. Think about yourself if you're a business owner listening today. This is vital information that can not only protect the first generation business owner and wealth creator, but entire legacy, and he or she entire legacy, which is something we're focused on and passionate about at Bridgeford. So Ed, it's been a pleasure today, and more importantly, it's been a pleasure working with you and having the ability to collaborate on mutual clients. And I'm a big fan of what you do, a true believer, and I look forward to many more years of great work and great collaboration and great thought leadership, because I certainly put you in the same category as the other 50 or 60 guests that we've had. You were a tremendous thought leader. You're talking about something that is extremely important, not talked about enough, in fact. And I think we should continue to support this message and this industry as it's growing. So Ed, anything else you'd like to leave our audience with?
No, I'll just rehash those couple statistics they opened up with, right? And when you look at those statistics, 50% of business transitions are involuntary, 70% of your wealth is in your business, 70-80% fail the first time. They're just alarming statistics, and I think exit planning can solve those. And just because you have an exit plan doesn't mean you're selling your business today, but it does mean you're prepared, right? And I always tell people it's never too early to begin an exit plan, but one day it may be too late.
Sure. Yeah, that's perfectly said.
Yeah.
Ed, again, thanks for your time and wisdom today, and your friendship and collaboration. And as I said, I look forward to many, many years of great work together.
All right. Thank you, Dave.
Thanks again for listening to Bridgeford Trust Company's Delivering Direction and Control podcast series. Be sure to subscribe to our podcast to keep posted on when new episodes are added. And for more information, you can visit us online at bridgefordtrust.com.